This white paper examines the growing influence of the BRICS, Brazil, Russia, India, China, and South Africa, economic bloc, and its potential impact on the US dollar and global currencies. With BRICS actively seeking to reduce reliance on the USD, the paper explores the geopolitical, economic, and financial implications of this shift. BRICS nations represent over 40% of the world's population and nearly a quarter of global GDP. Historically, the US dollar has dominated international trade, serving as the world's primary reserve currency. However, recent moves by BRICS to create alternative financial mechanisms, conduct trade in local currencies, and promote regional financial cooperation challenge the USD's dominance. De-dollarization BRICS members have intensified efforts to reduce reliance on the USD for trade and investment. Common currency proposals. Discussion of a potential BRICS currency, possibly backed by commodities such as gold, has gained traction. Bilateral trade agreements. Many BRICS countries are entering into trade agreements denominated in their own currencies, reducing USD exposure. Development of alternative financial institutions. The new development bank and the contingent reserve arrangement offer alternatives to Western-led financial institutions like the IMF and World Bank. Reduced global demand. As BRICS countries shift away from using the US dollar in trade, global demand for the currency may decline. Weakened reserve status, central banks may diversify their reserves, increasing holdings of BRICS currencies. Market volatility. De-dollarization could trigger volatility in forex markets, impacting liquidity and exchange rates. Geopolitical influence. The US may face reduced economic leverage in international affairs as the dominance of the US dollar diminishes. Emerging market currencies. BRICS currencies could strengthen as demand rises. Euro and yuan. The Chinese yuan in particular may benefit as China pursues greater internationalization. Commodity-backed alternatives. A BRICS-backed currency may create competition for commodity-linked currencies and destabilize traditional currency pegs. Economic disparities. Significant economic differences between BRICS nations may hinder the implementation of a unified currency. Political fragmentation. Diverging geopolitical interests could undermine collaboration. Trust and credibility. The US dollar's deep liquid markets and perceived stability present a challenge to any alternative. While BRICS initiatives present a credible challenge to the US dollar's dominance, a complete displacement is unlikely in the near term. However, as the bloc strengthens its economic coordination, the global financial landscape may gradually shift towards a more multipolar currency system. Policymakers, investors, and businesses must closely monitor these developments to navigate the emerging financial order. You may be asking what should be doing to protect ourselves since we are not able to see in the future, but could we take heed to the new information? Diversification investors should consider increased exposure to emerging market currencies and commodities. Policy adaptation. Governments should develop strategies to mitigate the risks of currency volatility. International institutions should engage with BRICS to ensure financial stability. We would like to hear your thoughts on this change. Do you think this is even truly possible considering recent events with the Trump administration? If you like these types of deep dives, let us know, comment below, and subscribe for future content.